Welcome to the Pump and Dump channel for another weekly update, this time looking again at oil and gas and the usual suspects, Range Resources and CNX Resources, going over some of the past weeks of performance in these stocks and then looking at the oil and gas price, of course, now. So I talked about this last week. I thought we were potentially forming a bear flag here, but the RSI, as you can see here, was like oversold, and we started moving up here, and we're moving back to a more normal level, or whatever you want to call that. But the key thing is this bear flag here, it was broken on the 12th of February and we stayed above it on the 13th, and even though we did dip below it on 13th and on the 14th today, we are still above it. So that kind of suggests that potentially we could be moving higher. Not saying that we'll just move up, to 58 again or something like that. I'm just saying that potentially we can move higher, and then we could roll over, or we could move higher, and who knows where it'll go from there. But in the short term, I feel like it's it's moving high, but there's still some doubts, and the doubts come from what the market is doing with Range Resources, for example. And I'll get into that in a few minutes when I finish talking about oil and gas. So gas is the same story. It's just been going down, just like oil. It's just natural gas has been going down longer. And the recency bias in these two is that it's been going down for so long here, and it's been going down quite sharply here, and people are really hesitant to think that we'll just reverse and keep going up now. And with natural gas, the fundamentals kind of suggest that we probably will keep going lower, but in the short term we could move up against this trend line at 192, let's say 193, who really knows. We could move up against here. The odds of us going through and sustainably going higher are very slim, in my opinion, because I just don't see Antero Resources wanting to fold yet. They kind of they'll have to produce a PV10 in their annual report, and then we'll see what they claim that they think that they can get out of their reserve, and if it will be enough to offset their liabilities or not. So yeah, with natural gas also, the RSI was pretty oversold down here, and that's starting to move up, but the share price, the shared unit price is still kind of low. Like, even if the RSI moves higher, it doesn't necessarily mean that the price per MCF is going to actually move correspondingly. And this is kind of one thing about this RSI, is that, like, if it's moving strongly up but this price is not moving strongly up, it's not a good sign. So getting to the stocks next to get some guidance. Range Resources this week has been kind of strange. It was down on Tuesday at 290. I was a bit amazed about that, to be honest. I didn't see the justification based upon the oil and gas price. It should not have closed there, but on Wednesday, sorry, it kind of gapped up, opened at 304, and it ran up all the way up to 331, and then it sold off. And that move up was just a reflection of the oil price being up quite nicely, and the market starting to see, hey, this is undervalued quite severely. So the market jumped in, bid it up to fair value, and then as it reached fair value, it started selling off. And I presume that the people who got in here, they had stop losses that all got triggered, and then nobody wanted to hold it over till the next day. Momentum traders or day traders, whatever they are. And then we had the same thing on Thursday. It ran up and it sold off again. Same thing, ran up close to fair value, and then it sold off to discount. And today on Friday, given that the natural gas price is a bit higher and the oil price is a nice bit higher than it was the previous day, I was kind of I was not prepared for it to start selling off at 331. I did not see that coming. I had a valuation in the 345 to 350 a share, and the market kind of wanted to just stay in this range, this range trading, swing trading, range trading, whatever you want to call it. And it got to like a 5% discount to the net present value, and then it sold off and got back down to like a 10% discount. Like, at this point in time, I think it's at a 10% discount. And yeah, so it kind of like shows that people are hopeful. They're thinking, "Oh my God, the oil price is starting to move up. I think it's going up, so I need to jump in." And then some are like, "I'm a bit more conservative. I'm doubtful. I'm not going to jump back in. I'm not going to buy. I'm actually going to sell into this big move here." And the market is like kind of signaling that it's undecided whether this means that we are going to go up or whether we're going to just roll over and keep going down. I mean, the market seems to be more on the conservative and bearish side, but I don't know what it will do. I just think that at this point in time, it's a bargain in my opinion. So I'm not interested in selling what I have at this price. And 2 weeks out, we have the earnings report, and I think the earnings report will give us a substantial boost. So I'm hoping to be able to hold into the earnings, and I hope that the oil and gas price will, go up with it, into the earnings report, so that we can have like a higher base to start rallying from. So my expectations are kind of in line of thinking that this can go up 30% or so. Getting into CNX Resources and looking at the chart here, we can see here around the earnings report, it was like 660 and it was as low, I think it was 645 or so on that day, and it was kind of at fair value at this point in time. But then the investors, I guess, they saw that CNX Resources, they added some more hedges for 2024 and 2025, and for all the other years coming back to 2020, they added some more hedges, kind of underlying that despite the natural gas price being this low, the hedges they are adding are closer to $3 an MCF, and they are not in any hurry to grow, even though they did mention here that they grew their proved reserve by 7%, basically replacing this year's production and adding a year or 2 years extra. But in terms of value, of course, it's, natural gas price gives the value of those reserves, and it doesn't matter how much they find if it's not worth anything. But anyway, the key thing here is once the earnings came out, I think investors started feeling bullish about this, because if you look at what they are actually achieving versus what the market is showing that it should be valued at, you can make a case for the stock is cheap. So it started getting bid up, and it went up all the way up to like a 30% premium to $8 a share, and then it rolled over, because I guess the people who bought here, they probably said, hey, 30% over 5 days is a great profit, let's take it. Who cares about what happens in the future? Let's just take it, because most people are buying stocks to sell them at a higher price. They're not really buying them as a long-term investment. And this kind of a move, this 30% premium, happened during a time period when the natural gas price did nothing. It was actually down. So my thinking is with Range Resources that we could see something similar. I think that not only because of these developments here, but also because of the current oil and gas price, the stock should be much higher. And if we go from that base, that much higher base, and we just add like a 10% premium, then we could get close to $4 a share. All, of course, is contingent on the oil and gas prices not cratering in the next 2 weeks. And if we go to the natural gas price here, we can see that it kind of bottomed last year in February, early February, and then it had a run up into the end of February, and then it stayed a bit high during March, and then it rolled over all the way into August to the low. So there's potential for a 2 week time frame for us to move higher. But it's yeah, I mean, if I take this resistance here, this trend line as resistance, it doesn't seem to be able to take us more than 1 week. And if we do move down on natural gas, that could be a detriment to Range Resources. But most of the value really comes from oil, and that's the key difference between the two stocks, is that Range Resources gets most of its value from the oil price. It kind of swings on the oil price, and CNX is swinging on the natural gas price. So if we look at the chart here, where could the oil price move to? Some people say 55. It's very reasonable here, 55. You can see here where we had this support last year. If we take that as resistance, we could get up to 55. But if we got up to 55, Range Resources would be very much higher than it is right now. And that's kind of, yeah, it's kind of how should I say this? Maybe wishful thinking that we get to 55. I mean, if we just get to 53 and we get a positive earnings result, we could see $4 plus per share on Range Resources. That's kind of my thinking. And with that said, remember, it's not investment advice or recommendations for you to buy or not to buy. If you like the content, you can subscribe. If you have questions, comments, or opinions you want to share, you can leave them at the bottom of the video. Maybe you see something that I don't see, and maybe you think that I got something wrong. You can always point that out. And I guess it's gonna be it for this week. So that's all I have to say, and have a good day.